typically these type of loans do not show up on your personal credit report, but you do guarantee it. So it's really based on the income of these properties, the income and your credit score, loan to value. That's how these loans are priced for vacation homes and short-term rental properties. It's easier to document if you are using VRBO or Airbnb, but there's plenty of options out there for vacation rental financing along with short-term rentals.
Welcome to the Investor Financing Podcast, where we interview real estate investors and lenders so you can learn all the secrets to getting your projects funded and scale your portfolio. And now, your host, Bo Eckstein.
Hello and welcome to another episode of the Investor Financing Podcast. And I'm your host, Bo Eckstein. And on today's show, we're going to discuss financing for vacation rentals. This has been a hot topic over the last year or so as the Airbnb and short-term vacation rental market has just been booming. Just when COVID hit, right, there was a huge slowdown, nobody was traveling, and then all of a sudden, boom, it's back and it's bigger than ever. A lot of my investors are looking at options of buying properties in different markets, Smoky Mountains, Arizona, all over. Anywhere people travel to for either pleasure or work, there's opportunity for short-term rentals. And obviously, certain markets are vacation markets. And we've been kind of stuck with the financing where there's not many lenders that will use one projection based on short-term income. If you have 12 months of operating history, that's a different story. But when you're going to acquire these properties, typically they're expensive, and the portfolio lenders are saying, okay, well, if the DSCR, or the debt service coverage ratio, qualifies from a rental survey based on a long-term lease, then we can do the loan, but we're not going to use your projections.
You're listening to the Investor Financing Podcast. We'll be right back after this break.
Are you in the market for a commercial loan? Did you find the perfect opportunity but need funding? Have a special situation? At Find the Bank, you will get quotes with competitive rates and terms from multiple lenders without any hassles. Have a multifamily property, construction project, owner-user property, industrial, mixed use, hotel? At Find the Bank, you can get nearly any kind of commercial financing. The process is simple. Once you send us some information about you and your property, we send back a quote sheet. Then we quickly connect you with an advisor. You won't spend hours calling multiple banks trying to find the right person to talk to. We'll connect you fast to the right person, hassle-free. Better terms than you could get on your own. Go to findthebank.com and complete the form. An advisor will be connected with you within minutes to discuss your specific financing needs.
Well, fast forward to today, we do have a lending partner that will not require a rental survey on your appraisal and will use projection based. Now, they might not agree with your projections, but they have their proprietary, formula. I don't know what they use exactly, probably a combination of AirDNA and different sources like that to really figure out what they'll agree to as far as income for that property, right? Because it's projection based. But what this does, this opens up to, one is getting financing without having to provide tax returns and income documentation. It's not worrying about DTI on your conventional financing. Two, you can get loans made to your business. You sign as a guarantor. And that also is nice because typically these type of loans do not show up on your personal credit report, but you do guarantee it. And the other benefit is you can borrow on a purchase money transaction, assuming that the SCR of the projections meets the 1.25 or better requirements. You can get up to 80% of the purchase price. And once again, I'm going to go back to the old days. This is a stated loan, meaning we're not documenting your income with tax returns. You just have to fill out a financial statement essentially and sign that. Okay. So it's really based on the income of these properties. The income and your credit score, loan to value, that's how these loans are priced for vacation homes and short-term rental properties. So they can also do cash out refinances and so forth. So using your income, it's easier to document if you are using VRBO or Airbnb, but there's plenty of options out there for vacation rental financing along with short-term rentals. Hope to be a source for you, trying to bring you updated information. And so this is really important today, that you're able to finance based on the projections of your vacation rental or Airbnb property. Once again, this is Bo Eckstein with Investor Financing Podcast. Please like, subscribe, and I appreciate you watching us or listening to us wherever you are. And we'll see you on the next episode.